Hello and welcome to The Trade. Before we get into the technicals, a quick trek at what traders are watching. And talks to end the Iran war could resume in Pakistan over the next couple of days, according to US President Donald Trump. The US State Department saying Israel and Lebanon has agreed to launch direct negotiations, although it wasn't immediately clear if they agreed to a framework for peace. Meanwhile, US Central Command said no ships had made it past its blockade of Iranian ports in the first 24 hours it was in place, while 6 merchant vessels turned back. The International Monetary Fund has cut its global growth outlook due to the Iran war-driven energy price spike and supply disruption, and warning that the global economy would teeter on the brink of recession if the conflict worsens. Now, under an adverse scenario of a longer conflict that keeps oil prices around $100 a barrel, the IMF has predicted global GDP growth would fall to 2.5%. The IMF's worst-case severe scenario assumes an extended and deepening conflict and higher oil prices slashing global growth to 2%, which it said could lead to a global recession. And the IMF cautioned against untargeted cost of living relief, such as the Australian government's recent decision to halve the fuel excise, which it said could contribute to further inflation. US Treasuries firmed on the prospect of more talks, with the 2-year yield down to 3.75%, the 10-year at 4.25%. Australian 3-year government bond yields fell to 4.61%, the 10-year at 4.9%. And looking at the US dollar index, it is a little mixed, the Aussie dollar at 71.2 US cents. Well, of course, the big question is, where is the war heading? And of course, in that thematic, what can we expect from oil prices? Let's ask Peter Pan from AC Securities, who joins me now. So, Peter, we heard a couple of scenarios there from the IMF. Where are you seeing Brent particularly go?
So headlines keep pushing oil price up and down, just like today when Trump said to Fox News, the war is almost over, and the price has dropped within minutes. But when we see the chart over the past months, his words rarely moved the market for more than one day. The reason is quite simple. He is caught between staying tough and protecting the US economy. That pressure makes his big moves always falling apart quickly. Iran at the other side is different. It has stayed consistent, and the consistency matters more for where oil price is heading in the future months. Iran has shown some openness to talk, but its key demands never change. So a deal between Iran and US is still a long way to go, likely more than 1 month. So oil price will likely stay high in the next several weeks. Thus, the preferred trading approach in medium term is to trade the range, sell the rise and buy the dip. And let's switch to technical side. After stop fire, Brent crude oil breaks below 95 support level, which means a shift into a new trading range. Key resistance above sits at 100, where support below sits at 90. If news-driven volatility emerge, false breakout in either direction may occur. So for intraday positioning or intraday trading, short entries look favorable in the 100 to 105 zone, where long entries should focus around 85 to 90 level, which is near the current price. For medium-term trading, as long as both sides, both Iran and US, maintain restraint on military option, oil prices should gradually trend lower through ongoing rounds of negotiation. So the prime strategy over the next month is to look for short opportunity near the 100 level.
So amidst all of this, we're watching very closely like other risk assets as well. A lot of people saying the Aussie dollar looks very favourable in this environment, particularly the RBA expected to hike. How is all of this influencing the Aussie?
So since the US-Iran war breakout, the dollar and oil price has a strong positive correlation, while the Australian dollar has the largest currency volatility in the opposite direction. That means oil volatility directly drives Aussie dollar. So Aussie dollar has risen sharply since the 2-week ceasefire was announced. Talks may still hit some bumps, but the overall direction remains up. The core medium-term strategy is to be patient, wait for the dip, and build long position at better levels rather than chasing the upside move. The first support below is at 0.7 round number with 0.695 as the next level below. On the upside, the near-term targets is the previous high at 0.71, which has already been breakthrough today, and and beyond that, 0.715 is a 4-year resistance high, a very difficult level to break through and a key profit-taking zone for existing long position.
There's also the thought about what all this is doing to the US dollar and to gold as well. Do you think gold might be coming back to a bull market?
Yeah. So unlike other assets like the Aussie dollar or like the stock market, gold doesn't move in a perfect negative correlation with oil. That is because gold is driven not just by the war, but also by the Fed rate expectation. As this chart shows, gold is closely negatively correlated with the 1-year U.S. Treasury yield. This was especially clear after the last Fed meeting when Paul said he would stay on as chair if the new nominee wasn't confirmed for the next chairman. That hawkish tone sent the Treasury yield surging and gold price was tumbling. So gold's direction also hang on who will get nominated as the next Fed chair. Walsh has resubmitted his material and confirming hearing is set to restart next Monday. If he gets confirmed next week, gold price could break higher and rally sharply. However, this week, because the hearing is next week, so this week price movement will still be influenced by the war or by the by the U.S. and Iran talk headlines. From a technical perspective, for the chart, yesterday's news of second round U.S. and Iran talk pushed gold breakthrough 4,800. But as mentioned before, the negotiation won't get very smoothly. So the breakout above 4,800 is most likely to be a false one. So for medium-term long position build, it is better to wait for a pullback before entry. And the key support for this week sits in the 4,600 to 4,700 zone. So next week, next Monday, if Walsh get confirmed, maybe next week, gold could easily break above 4,800 regardless of how the talk go, and potentially push all the way through 5,000 key level and even to 5,200.
All right, interesting stuff. Thanks, Peter. As always, Peter Pan there from ACY Securities. That does it for this edition of The Trade. Be sure to join us next time.